I did the math, and if you took the amount of gold that the U.S. claims that we have, the 8,300 tons, and you divided it into the debt at the time, gold would have to be $125,000 per ounce to pay off our national debt. So here we are, the debt now is, what, 50% higher. So now you're talking of a number, a couple $100,000 per ounce, and that's assuming we actually have the gold. I've said for years that I think there will be two resets. The first reset will be man-made, it will fail, and then there will be a reset done by Mother Nature, where true, real, and fairly clearing prices exist. A little further on the reset, what we're seeing now is, and we're right on the doorstep of it with the BRICS currencies beginning in the next few months, and the trade split beginning, or the trade split has been going on for a while, and you've got nations that are de-dollarizing. There is a reset between East and West that's going to occur, and the West is going to fail in that reset. What's going to happen is you're going to have the standard of living in the West is going to collapse, and you're going to have a lot of pissed off people. Some of those people will say, "Oh, government, please help me," and some of the people are going to say to the government, "Go screw yourself." You're going to have pissed off people. Either way, whether they go along with the government or don't go along with the government, you're going to have a populations that are extremely pissed off because their standard of living evaporated literally overnight. And that's the reset between East and West is what I think you're going to see. Whether it's this event or further events, the de-dollarization process, without a doubt, has already started. Now, the only reports that I've seen where they're going to announce a currency, a gold-backed currency, came from RT. It's not been confirmed by China. It's not been confirmed by Russia. It came from RT News. And you do have to admit, RT has been a better news source than any of the mainstream media. Now, that said, my guess is they will talk about a currency. They may or may not mention gold. I believe they will mention commodities, in other words, hard assets, as backing for the currency. And what I think is going to happen is what happened with the euro originally. If you remember back before the year 2000, the euro was strictly a digital currency. It was used for trade settlement and only used between nations. And then, what was it, 2003 or 4, I can't remember. But then they actually came out with currency notes, and all of the countries switched all of their local currencies into euros, and thus it began. And I think that's the model probably that the BRICS are going to use. Initially, it will just be a digital currency used between nations strictly to settle trade. And at a later date, it could be a year from now, it could be 5 years, could be 7 or 10 years from now, there will be a BRICS currency that's used in the streets. Now, whether that's digital or paper, I don't know. I suspect they're going to want to do digital too because, they're governments and they want to control the people just like the Western governments do. Right. I mean, that's historical of any and all treasuries. And I mean, that's the reason. That's the reason for 1933 when we went off the gold standard. It's the reason for Bretton Woods. It's the reason for the petrodollar in 1971. Yeah, and the U.S. abused that privilege. They've abused it publicly. I mean, they took all of Russia's Forex reserves, and the world watched that happen. The world's thinking, well, if they could do it to Russia, they could do it to us. And that's one of the reasons. That's what was so dangerous all along with the U.S. threatening the SWIFT system. What did they do? They've created their own alternative system.
Yeah,
it's all about confidence. Currency has always been about confidence. And you mentioned, the bricks, you got these bad eggs in a basket. Those bad eggs in a basket are far better than a basket with the egg that's broken, and the egg that's been a thief and a bully all over the world for the last 50 years.
Yeah.
So, I mean, it's an alternative, and it's a cleaner alternative. Well, and Francis, also, it's important to understand that gold and silver, because they are direct competitors to fiat, direct competitors to the dollar, their prices have been suppressed for 30, 40 years.
Yeah.
Through derivatives. Before that, they were suppressed, I guess, psychologically, whatever you want to call it. The point I'm trying to make is, once we get to a place where asset prices clear, the increase in purchasing power of gold and silver are going to be far greater than 99.9% of the people out there have even dreamed of. And I'm going to tell you, any projection that you've seen for the price of gold or the price of silver is going to be too low.
Too low. Yeah.
Any projection you've heard of already is too low. I wrote about this concept 5, 6, 7 years ago. There's no question China has far more gold than what they officially say. I mean, I could have 5 years ago, I could have shown you on the back of a napkin that China had over 25,000 tons. Just look at what they imported year after year, plus the 400 tons per year that they mine that does not leave the country. I mean, they are the biggest holder of gold in the world. No ifs, ands, or buts about it. And we talked about currency being backed but not convertible. That's the equivalent of the woman who walks into the ballroom with this big, gigantic, beautiful necklace. Everybody looks at it and adores it. And that's what happens with currencies. Countries, individuals, again, we're talking about confidence. And he who has the gold makes the rules. And if they all of a sudden come forth and say, look, here's how much gold we have, show us how much gold you have, and then the Western nations, don't have even close to what they've accumulated, well, guess what? Those are the ugly women in the ballroom. I did this math, I'm thinking it was maybe 4 or 5 years ago when the U.S. Debt was 23 trillion. I did the math, and if you took the amount of gold that the U.S. claims that we have, the 8,300 tons, and you divided it into the debt at the time, gold would have to be $125,000 per ounce to pay off our national debt. So here we are, the debt now is, 50% higher. So now you're talking of a number, a couple $100,000 per ounce, and that's assuming we actually have the gold. And I wouldn't assume that, because I don't believe we have it. The foundation for the entire financial system is debt. So what they're doing is they're hollowing out the foundation itself. You've got banks, you've got brokers, you've got, and especially insurance companies, are holding all of this debt that is devaluing. It's well below par now. You have some bonds that are trading at 70, 80 cents on the dollar. So what that's done is it's made the foundation weaker and weaker, while at the same time they're adding more and more debt onto the system. So it's a double whammy. The foundation is weakening, yet the debt load itself on top is getting heavier. As far as getting out of the system or what to do, you want to become as self-reliant as you possibly can. You need to have the mindset that there's going to be a 2-week period of time, or 2 months, or 6 months. I have no idea how long once this thing goes down, how long it will take to reboot. But there will be a period of time where if you need to dial 911, nobody's going to pick up the phone, because when the financial system goes down, when credit is unavailable, the system itself will not operate. Credit is used in every single entity. Credit is used for every application, anything you touch, anything you do, every single day. Nothing will work without credit. So just understand that there's going to be a point in time where you're going to have to go it alone.